Welcome back to The Explainer. Today, we're diving into the absolute mess of conflicting signals the financial markets threw at us in November. It was a seriously weird month, full of contradictions. And you know what? We're going to make sense of it all. To really get the vibe of what was happening, this quote just nails it. It perfectly captures the AI boom in November, right? You had investors throwing money at the stage, but the key players, even Oracle and, surprisingly, Nvidia itself, the headliner of the whole AI show, were kind of backstage looking at each other, not so sure. The crowd was hyped, but the band was getting cold feet. All right, so here's the plan. We'll kick things off with the huge gap between Wall Street and Main Street. Then, we'll figure out why the AI party suddenly quieted down. After that, we'll peek into crypto's hidden potential, see who won and lost in November, and finally, try to figure out what's coming next. Okay, first up, we have to talk about this massive split we've been seeing in the US economy. It's honestly one of the most dramatic things we've seen in years. You've got the stock market flying high, while everyday folks are feeling, well, not so great. It's a real tale of two completely different markets.
And yeah, it's got a name to match how crazy it is. The Maw of Death. Seriously, it's what they call it. When you see this giant K-shaped split where stocks are shooting for the moon, but public sentiment is just cratering.
And this chart, wow, it just lays it all out, doesn't it? On one side, you've got the S&P 500, basically the stock market, hitting these new highs. And on the other, consumer sentiment. How people are actually feeling about their finances is just in the basement. We're not talking a little disagreement here. This is a huge historic gap between what the market thinks and what people think. So this begs the big question, right? A gap this huge can't stay open forever. Something's got to give. Those jaws have to snap shut eventually. But how? Well, there are really only three ways this plays out. Option one, the best case scenario. Sentiment catches up to the market's party. But the other two options, well, they're not great for stocks. Either the market takes a nosedive to meet reality, or they both kind of meet in the middle. No matter how you slice it, 2 out of 3 paths point to some serious turbulence. And this whole idea of a big split wasn't just happening at the big picture level, it was happening inside the market too. Even in the hottest sector of the year, AI, we started to see some serious cracks in the hype. I mean, for months, it felt like this AI-fueled rocket ship was just going straight up, no questions asked. And then, November happened. The engine sputtered. The tech-heavy NASDAQ actually had its first losing month since March. That's a big deal. It was a clear signal the nonstop party might be over. And get this, it's like another maw of death opened up right there in the stock market. You had the Magnificent Seven, the huge tech stocks that carried everything all year. They actually started lagging behind the rest of the S&P 500. The generals were suddenly falling behind their own army. The shift was obvious. I mean, Nvidia, the poster child for the entire AI explosion, had a really rough month, down about 13%. But others, like Google, held up. So what's going on? It looks like investors are finally starting to ask the tough questions. They're looking past the hype and asking, okay, but where are the profits? The market isn't just buying the AI dream blindly anymore. It's getting picky. Okay. So this new pickiness in tech stocks is actually a perfect segue. Because while some investors were getting nervous about AI stocks, a whole other group in a different corner of the market was quietly getting ready for something big. Let's dive into what was happening under the surface in crypto. So while everyone was watching Bitcoin and Ethereum prices kind of flounder, something really interesting was going on behind the scenes. The supply of stablecoins, think of them as digital dollars, hit an all-time high of $185 billion. And that's just on one network. That is a mountain of cash just sitting on the sidelines, waiting. So what does a mountain of cash like that even mean? Well, analysts are calling it armed patience. I love that. It's like a coiled spring. All that money is just wound up, tight, ready to be unleashed and power the next massive move in the market. And here's why that matters. Stablecoins are basically the fuel for the entire crypto engine. It's the cash that makes everything go. And here's the kicker. Historically, when you see a huge pileup of stablecoins like this, it's often the signal that comes right before a big rally in Bitcoin's price. It's a classic sign of potential energy just building and building. All right, so we've got all these crazy conflicting signals, right? We've got consumer dread on one hand and this massive coiled spring in crypto on the other. So
who actually won in November and who got crushed.
Okay, let's check the scoreboard. The clear winners? Precious metals. Silver had a fantastic month, its 7th in a row. On the flip side, crude oil just kept on sliding. But the real headline was crypto. It was a brutal month. Bitcoin had its worst loss since June of 22, and Ethereum got hit hard too.
So the story of the month was really simple. A big rotation. Money was flying out of what people saw as risky, like crypto, and running straight into the safe arms of precious metals. The food chain was super clear. Silver beat gold, and gold absolutely crushed Bitcoin.
All right, let's tie all this together. What does this all mean for the road ahead? What are the experts worried about?
You hear a lot of people getting excited about the Fed may be cutting interest rates soon. And normally, yeah, that's great for stocks. But Goldman Sachs is waving a huge red flag here. They're reminding everyone that the reason for the cuts is what really matters. If the Fed is cutting rates because we're sliding into a recession, well, history shows that stocks still get hammered. So that's where we're left, with this massive tug-of-war. What's going to win out? The deep pessimism of the consumer and that maw of death? Or that $185 billion coiled spring of cash just waiting to jump into the market? Honestly, right now, the direction is anyone's guess. If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. More news in our Telegram channel in the first comment. See you next time.